Hi, this is Kirubakaran Rajendran. Welcome to Trading with Groww channel. In this video, we are going to talk about an interesting topic which is trading on loan, trading on borrowed money. I want to share you an interesting incident which has happened recently. One day I received a message in Twitter that someone, a trader who has been trading for the last 4 years, and he wants to talk to me. And he said that he is in deep trouble, and if I could reach out to him, that would be really beneficial for him. So I called him up, I spoke to him. He said he has been trading very good for the 2 years, and for the next 2 years, what he did was, since he thought he's doing really well, he started borrowing money. He started borrowing money from his friends, from his families, and eventually he started borrowing money through these loan apps, where if you just upload your bank details and PAN details, they instantly give you the loans, using which he deposited that in his trading account and started trading with a significant borrowed money. Over the years, what happened was, earlier he was trading without any borrowed money with his own capital. Because of that, there was no pressure, so he was able to do really well. But after he started borrowing money, the pressure was so immense, he significantly lost all the money which he has borrowed from his friends, families, and through these loan apps. Eventually, he went into deep debt, and he couldn't even recover those EMIs which he has to pay. So the trading was in loss, EMI he couldn't pay, and even he did not get any job also. So he was in deep trouble and he couldn't handle that pressure at all. So he was asking me what should he do. So when he came to the profession to trade, which he really loved, and that trading itself has thrown him out because of these kind of borrowed money. So in this video, I'm going to help you out to tell you exactly what you should do and what you shouldn't do. And if you are in a position where you are thinking that I can go for a loan and then trade, stop doing that. Let me explain why it is going to greatly affect your trading performance, and also I'll explain you what is the right way to trade. See, trading with a loan is like running or walking on a tightrope without any safety net. Just one mistake, done. You are totally dead. Just like that, when you're trading with these kind of borrowed money, what happens is, with trading, everybody knows there are months you can make profits, there are months you can make losses. But when try to trade with these kind of borrowed money, you have to pay the EMI by end of the month. Whether you are making profit, you are making loss, no matter what, the EMI is 100% confirmed. So because of this, you take so much of pressure, so that you wanted to trade every single day just to get back that EMI. And in case, even though you are able to make certain amount of money to get that EMI to be paid through your trading, after some couple of days, if it ends up in loss, then that will give you even more higher pressure, because now you have lost your EMI money. You to get back that, you get into revenge trading, and that is going to put you even more higher pressure. So by the end of the month, when this loan amount EMI is not met, then your trading performance will start deteriorating and you will not be able to perform at ease. So when you trade with your own capital, you will not have any specific targets to meet. You don't have any specific commitments to make. But when you trade with these kind of borrowed capital, the kind of break even that you need to make, for an example, if your overall EMI which you need to pay by end of the month is 25,000, then your break even cost is this 25,000. You need to make 25,000 minimum profits to pay this EMI back. So your break even itself is 25,000, and you need to make more profits above this 25,000 to get as a real trading profits. So the higher the money that you borrow, higher this break even cost comes. So it is always wise to avoid these kind of huge loan borrowing and then trying to trade with this kind of borrowed money, because the more you borrow, the more the break even cost is. So there is a research study that has happened in Stanford, where they have talked to all the people who are working in different industries and try to list out the list of professionals which are highly stressed environment. So the first and foremost thing comes, like the professions like the surgeons, professions like the firefighters. So these were the professions where if you are working under those circumstances, your pressure is so much. Similar to that, if there is one profession which can relate to these kind of high stress levels, then that is definitely trading. Trading can give you a lot of pressure. In addition to that, trying to trade based on borrowed money will put you even more higher pressure. So when you're already in a particular profession which is giving you higher pressure, why should you take even more higher pressure by going to buying a loan, trading borrowed money and trying to get money from friends and then trying to trade? So all this is going to put you a lot more pressure. So if you talk to any successful traders, one thing that you can find that is none of them trade with borrowed capital, none of them trade with loan money, because they don't want to handle more pressure. As long as they are trading with their own capital, the performance will be in tandem with the markets and they would be able to handle whether the profits or loss, no matter what it is, they would be easily able to handle it. But when someone is trading with other people money or borrowed funds, there is a immense pressure to answer someone. So that is going to dampen your overall trading performance. And maintaining consistency becomes extremely hard. Say, suppose if you're a breakout trader or if you're a trend follower, go and check your historical records. You will see that 80% of your overall profits in a year will come from 20% of the trades. And you never know when those 20% of the trades is going to come. So most of the people who are trading a trend following or breakout traders, if you take their overall trading journey and plot the equity curve, you will see that out of 12 months, 7 months they will be in loss. But the rest 5 months they'll make immense profit, which will also cover up those losses, and end of the year they end up making huge profits. But if you try to trade these kind of trend following or breakout setups using a borrowed money, what happens is if 7 months you don't make profits, you have to keep paying the EMI every year. And what happens is once you keep paying the EMI from your capital, it keeps going down. So over the period, say suppose if you have started with a 10 lakhs capital and for 7 months you did not pay any single you did not make any single money for 7 months with this 10 lakhs of capital. So then from 8th, 9th, 10th, 11th, 12th month you are making huge profits. But psychologically what will happen is I'm trading for 7 months and I'm making no returns and I'm keep paying EMI. So I'm paying the EMI from where? From the trading capital. So every month you will withdraw certain portion from your trading capital. So your overall trading capital will keep going down. So when your overall performance is about to go big time, like when the big trending move is supposed to happen, your trading capital would have reduced because you have taken money from your trading capital to pay back the EMI. So just when your trading system starts performing well, you will be trading with the lower capital. So your overall returns will also go down. So when you trade with these kind of borrowed money, and that too when you're trading with these kind of trend following or breakout system, there will not be any consistency in overall returns, which will again put you in immense pressure to pay back those EMIs. And generally, when you trade, you know that it is automatically going to give you huge pressure. Then you tend to spend very little amount of time with your kids, with your family, because trading is a stressful profession, you know that. But when you try to trade with these kind of borrowed money, what happens is you will be completely out of your family zone. You will not be able to spend time with your kids. You will not be able to spend time with your family because this thought of paying EMI by end of the month will keep running in your mind throughout the period. So by end of the month, how do I arrange this EMI? That is the only thing that will keep running in your mind. So even though you trade between 9 o'clock to 3 o'clock in markets, that is not the time you are going to get occupied. Even after the market is closed, your personal time is going to be collapsed totally because you have this immense pressure to pay back this EMI by end of the month. So because of all these reasons, I would highly recommend you to avoid trading using any kind of borrowed money. Never ever buy loan or never ever go for any kind of these kind of loan apps, because that is going to put you in a lot of pressure, not only for trading, in personal scenarios like these loan apps. When you try to make any kind of applications, they'll instantly give you the loans, but in order to pay back, it is really hard. They can try to reach out to your contacts and they will try to scrutinize to you greater extent to get that money back. So all this will psychologically disturb you and your overall personal life itself will get distracted because of all these things. So to conclude, first ask yourself, why did you come to trading? First of all, we want peace of mind. Many people don't really like their job, so they wanted to become a full-time trader. So once you take all these decisions to come to trading, because over the years I don't want to be a big profitable trader next week, I don't want to be a big profitable trader next month, we know that. But because of all these poor decisions by taking no loan and then trying to trade based on borrowed money, your time to become a successful trader will keep taking a longer time. So your expectation should be, I want peace of mind. I want to make money, but I want to make money with peace of mind. When I have some positions open overnight, I want to sleep peacefully. This is what should go in your mind. So when these things go in your mind, your overall expectation will not be on the profits, will automatically focus on the process. So I always say, when there is a process, there will be profits eventually that is going to happen. So make sure you always trade with your means. Always trade with the capital that you can afford to lose. Because you are in this profession at least initial 2 or 3 years, just try to learn the process. Once you learn the process, you will adapt to the process. And once you adapt to the process, slowly you will become a disciplined trader. And the moment you become a disciplined trader, you will be able to become a profitable trader. So avoid borrowing any money from your friends or family that is going to ruin your relationship. Avoid going for any of these loan apps. Avoid buying any kind of personal loans to trade in the markets because of whatever the reasons that I have mentioned just now. Always focus on the process. Give some time. It is okay even if it takes 2 years or 3 years. But eventually you want to become that kind of full-time trader means don't take initial, all these kind of huge pressure during your initial journey. That will totally move you out of your trading career. So keep this in mind when you take your next trade. And also if you are in the mindset to borrow money to trade, stop that mindset right now. Always focus on the process. Eventually that is going to lead you into a good progress, and that is going to help you to become a profitable trader. So this is what I want to convey in this video. I'll see you guys next week with another video.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.